Hello, traders. Welcome to this live webinar. Thank you for joining. This is another year finished in trading terms. We're very close, just a couple of trading days left. And we're going to enter 2021. So, of course, we're going to take a look what happened and more importantly, what's going to happen or try to make the best predictions about that, using Elliott Wave patterns, chart patterns, time patterns, of course, the best to our ability. That said, always, of course, keep in mind that a full year is very long. So obviously, things that I might expect now could change a few months from now, halfway towards the end of next year. Of course, when new information is available, we'll be talking mostly about the charts and technical analysis, not so much about fundamentals, but yeah, of course, with some small details that, or not details, but small things that we will add here and there about fundamentals, but we're not that focused on them. But of course, in the long term, they do play an important role. So at times we'll add some information there as well. Yeah, so before we dive into the charts, though, wanted to quickly share our website here just in case, elitecurrency.com. And there are 4 tabs at the top. About, you'll find information about us, services, you'll find what type of trading we offer, forex and CFDs, which include manual and options. And also we have some strategies and ebooks, all of that you can find in tools. Providers gives you more information about brokers, our software and sponsorships. That's special deals that you can get, sometimes getting stuff from us for free because of sponsorships offered by brokers. And last but not least, research, education, blog, education, webinars, and events. This particular webinar, by the way, is made available and sponsored by one of the brokers here, Monfex. And keep in mind that there's a special deal going on. Basically, you get 6 months of ECS Live for free if you open an account with them through us. That's a special sponsorship, and they're also sponsoring this, making this happen, this webinar, through their sponsorship. And yeah, basically check it out. They have some limitations towards the countries that can open account with them, but UK is one of them. So if you're from the UK, that is one of the countries that's not mentioned here, but is okay, and you're able to open an account with them. All right, now let's move on and take a look at the charts. I guess we can start with the euro dollar. So starting very quickly, fundamentally speaking, well, for both countries, of course, we're seeing a heavy impact from COVID, obviously. With the vaccine coming up, I suspect that things will settle down slowly but surely. It will probably be a process that will take place throughout the whole 2021. I don't think that that's necessarily earth-shocking statements. I think everyone expects that. Which country will do better in that? Tough one, but I suspect that the EU might, the Eurozone itself might pull out a little bit better at this moment. It looks like that. Of course, there is a new presidency in the US coming up in January. So that is an unknown factor. Of course, that might change how the crisis is dealt with in the US, etc. Let's see. I suspect that that at this moment the Eurozone might be a little bit in a better position, but of course, presidency change in the U.S. Might change that as well, depending on the Senate. Of course, that will be decided. Who controls the Senate? Which party controls the Senate will be decided, I think, later this month or very soon, or beginning of January. So that's something that could impact it too. Now, of course, the COVID itself is having an impact on the economy. I suspect that as things stabilize, the economy will stabilize as well. So that will probably get a little bit less negative. But first quarter might still be tough. From a technical point of view, price is breaking the range we've seen for about 6 years. I think this was 2014 when it entered this range, beginning 2015. So it's been there 6 years, more or less. Now, there was a small breakout here, as you can see, but price returned back into that range, somewhere between 104 and about 117, as you can see. Price stayed there, except this break here for 6 years in a quite narrow 1,300 pip range. Price is now breaking above that range for the second time. And if I look at the momentum of price, I see momentum to the upside here. I see momentum in this push up, but I don't see momentum to the downside. I see momentum was here available, but that's all the way down, all the way back in 2014. That's a very long time ago. And otherwise, price was going sideways. So it was a big fight between the bulls and bears in this zone and this zone. But the downside never really had that much energy. Look at this. It always looked like a falling wedge to me. It surprised me how long it lasted. Surprised me how much it still moved lower in that downtrend, right? Every time we got a new lower low, price moved up a lot, but it never really broke out of that range until finally after COVID, actually, the March candle is a doji, and after COVID arrived, the euro dollar finally broke up to the upside, as I personally favored for a long time. Now I must say that the sturdiness of this channel threw me off a little bit at times because it just kept going more than I imagined, and that's at certain moments. I must say that I even doubted about the fact that it could break to the upside because this trend really was starting to form quite a sturdy channel. But eventually, yes, finally it did break to the upside. The momentum is therefore to the upside, and price is not only breaking above the 21 EMA for the second time, but is also now breaking above the long-term moving averages and the resistance fractal at the long-term moving averages. The HMA is up. Price action is pulling away from the 21 EMA. The angle of the 20 EMA is up. This is the second break to the upside here. We have a higher low. So all what's left is the previous top at this moment from a technical point of view, in my view. Here, we're approaching an 88.6 fib at 123.35. That is the main target for the moment. For any short-term trading or even medium, basically short-term trading, indeed, that could be still a zone where price might bounce. But I suspect that more upside is possible, specifically if it starts to break above 123.35. And then there's space to the previous top at 125, 125.50. And if it breaks that, it can go to the minus 270 target of 131.50. If it breaks that, it can go to the minus 61.80 target of 139. So the space is to the upside if it manages to push above this resistance zone. And in that case, we'll have a higher high, and we'll be seeing that third upside. Now, what price will do at these targets, I don't know. We'll have to see. I don't want to think that far ahead. I can think that far ahead, but I don't know, to be honest, how price will respond to those levels. What I do know, if we see a flag at the 272 target like this, then in that case, I do suspect more upside like that. And if we get a flag like that, I do suspect that price will go up to the minus 61 or minus 100 target even. I see more upside at this moment, considering the momentum, considering the downside is very corrective, and we have a higher low and potentially had inverted head and shoulders. Although it's an ugly one, but we have a left shoulder head and a right shoulder as well in place. And of course, we broke the long-term. I should mention, obviously I didn't, but this is important. We not only broke that long-term resistance trend line, but we had a break, retest, and bounce. So I think there are a lot of technical factors that are pointing to upside at this moment. With regard to the downside, I think we had the chance that an ABC was completed with this being an A here, right here. Then we had a B, C, D, E triangle for B, and then we had a downset for C. So it looks like an ABC down was completed. Oh, my apologies. Let's go back to the euro dollar. And if we put a fib from this swing to this swing, no fib respected, but that's okay. So it looks like to me, 5 waves up, finished, ABC down, and we're going up again, either with an ABC or maybe even a 1, 2, 3, 4, 5. I don't know. I don't want to be that bullish yet, but I think that unless I really see a very hefty response at 123.35 and the 88.6 fib, and really see price falling in, like a stone back to the 21 EMA, only that would change my opinion. Otherwise, I think that upside has an edge here with all the things I just mentioned, basically. Okay, so let's zoom into the weekly charts. We already had basically a 1, 2. This was looking like a wave 3, 4, 5 pattern developing. So it looks like price could push up a little bit more. Eventually, we might see another bigger wave 4 go back towards the long-term moving averages, and then a continuation towards 125, 130. So I think that there's a small push up left, but let's not forget the 88.6 fib at 123.35, 125. It could be a spot where price might make a bigger correction down to the 144 May. The daily chart has, or the weekly, this is the daily chart. Price has not retested the 144 May since May. It can do that because there's divergence between these tops. Divergence patterns, of course, do not play out right away, or right now, 1, 2, 3. But eventually, I think that price will go back to the 144 May, retest the previous wave 4, which was here at around 116, and use that for a bounce up to 125 and 130 zones. That's what I'm expecting at this moment. Small push up, basically, then bigger ABC down of some type. I don't know what type, but probably a little bit a pattern where we can get down to the 144 May, either with quick price action or just a very lengthy kind of choppy consolidation zone that takes a few weeks. And price will get back to the 144 May, test this support zone with these previous bottoms and wave 4s, and then bounce to the upside for a 1,000-1,500 pip rally later in 2021 to 125, 130. That's what I'm expecting. So dollar weakness, basically, this moment, my view. Let's take a look at the pound. Any questions, of course, feel free to reach out. If you're looking live, if you're looking at the recording, feel free to drop a note through our email, of course. All right. So pound USD, double bottom, basically. Although it was a slight break of the bottom, we did have a lower low. In fact, that could indicate the end of the downtrend cycle that we've seen on this pound dollar ever since 2007. For 13 years, it ultimately dropped from 2.1 back in before the Great Recession to a low of 114, and just around the outbreak of COVID in March 2020. So all in all, a downtrend of almost 10,000 pips to 11 to 114. Massive fall during the Great Recession. Then we had a correction. And 2015, we saw a decline with the acceleration, of course, at Brexit around 2016. Let's see here. And we saw a pullback and then a continuation lower. So I think personally, whatever this formation is to the downside, whether it's a 5-wave pattern, which could be a 5-wave or an ABC, I think the downtrend cycle is over from my perspective. For the moment, at least, I think that seems quite likely. And I think that the second break above the 21 EMA here, what's happening right now, not only break, but we had a pullback continuation, just like with the euro dollar, and also a break of this resistance trend line, just like with the euro dollar. Price is clearly above the 21 EMA, and the HMA is up. So I think we're seeing an upside here, and we should, I think we'll see that continuation higher for a bigger push up. That could be a ABC pattern, for instance. So we might see a push up to complete wave A. Then we might see a wave B, which could take place in some type of ABC pattern. And then I would expect either a wave 3 or C to the upside. So A, B, C like this to go back to those long-term moving averages and go back maybe to the equilibrium zone. So that's what I'm suspecting at this moment on the pound. Now, with the pound, of course, we think about Brexit, and Brexit has been basically arranged, has been dealt with. Now that the EU and UK have made a deal, a trade deal for the post UK exit time, let's say. So with that stability in mind, I wouldn't be surprised if pound could strengthen, then maybe still weaken a little bit for whatever reason. Maybe its economy slows down, but then the interest rates go up, and then we see the pound move up again. That could be a scenario that fuels this up and then down and then up again, for instance. So let's see. But from a technical point of view, that's what I'm thinking at least. I think from a weekly perspective, we are looking at a 5-wave pattern, 1, 2, 3, 4, 5. Whether the wave 5 is finished, I don't think so yet. I think we're going to see on the daily chart here a potential for price to still maybe fall into support like this and bounce at that support zone for a new rally, maybe from 132.50 up to 137.50-ish, make a new high, complete the wave A at that point, and then start the wave B down. So we can put a fib from here to here. We have a 78.6 fib at 137.40, so that kind of supports that resistance zone as well. That's where maybe that the wave A could finish. And we could see then downside, ABC pattern down. Let's put a fib. Let's switch and flip the fib from here to here. If it goes to 137.50, there we go. We might see price then fall down to the 38.2 fib at 128.50. Move up again like this to 130 perhaps, and then down to 125.60, the 50 fib, maybe 123. Not sure if it'll go that deep. And then move up again towards the 272 target and the 61.8 target, maybe the minus 100 target there for some pound strength, I suspect. Okay. Of course, if we see this, very important factor for this outlook is whether we get corrective price action to the downside. We don't know. I don't know necessarily how far price will go up. So maybe it doesn't stop at 137.50, but even goes up further up first to 140 before making some correction. Maybe the correction is more shallow. Maybe it doesn't go to the 50 fib, but it's a flag and then moves up. Maybe the correction is deeper. These factors, of course, remain. It's not something I know for sure. It's just I'm attaching, let's say, the best probabilities to this scenario. Time will tell if there are maybe some details that change or bigger parts that change. I don't know for sure, of course. This is my best guesstimate at this moment. 137.50 down to 128.50, then up to 130-ish. No, wait, maybe a little bit higher, 132.50-ish. Let me check. 132.50-ish, and then down to 125.26, then up to 140.30, 151. Let's see if this pattern plays out. But certainly the downside, how it moves down, of course, very important. Obviously, it's still very much in a downtrend, but with the break to the upside, with momentum to the upside, and with a corrective pattern, we might see more upside eventually unfold, basically. Let's put the fib on this entire downside. I don't know how useful it is, but still good to keep an eye on that one as well. And we see 137, also a 23.6 fib. We see a 38.2 fib at 151. Those are also key levels to keep in mind. Of course, 50 fib around 162. Let's put the fib on this one. And we see that price is generally now at around the 38.2 fib. And could also be another key resistance zone. So it's kind of like with the euro dollar, expecting dollar weakness personally in the long run, at least. Let's see. We'll keep up to date, of course. I'll see how things evolve and see if that changes or indeed stays the same. Let's move over to Europound. How about these two? Which one looks stronger? They're in a big battle at the moment. Ultimately, pretty big range. Tight range, I should say, for quite a long time here. About 1,000 pip range since the Brexit, actually, funny enough, with some decent ups and downs along the way, but ultimately not breaking above or below this point. And yeah, I think that personally, technically, it's looking bullish to me, but certainly not easy to push to that resistance. And I don't know if it will happen and when it will happen, but ultimately, it does look like got everything aligned here. 610, 23, 144 EMA, then 21 EMA, price above it. Fractals are green. This is technically bullish. We have, difficulties pushing through this resistance, but ultimately there is momentum prior to it, followed by consolidation. I do expect to push up to retest the previous high and go maybe retest parity eventually. So price action sailing above or at the top of the 21 EMA. So let's see. I wouldn't be surprised. I mean, if price does break through the 20 EMA, it might retest a support zone first. It doesn't have to break right away. It could fly down first, retest the bottom of the support zone of the range, and then move up. So let's see if price stays above the 20 EMA. If it does, what I would like to see is a break followed by a flag. And if that happens, then it's looking ready for a push higher. When this break might happen is really difficult to tell, I think. But let's see. I suspect maybe second or third quarter 2021 based on time patterns. But that's always a bit tricky to estimate that. I think most important is just to wait for the break either of above 91 or wait for the break below the 20 EMA zone on the weekly chart for a push lower and then a bounce. But ultimately, eventually, I do expect this to push higher. All right. Let's take a look at dollar yen. There we go, dollar yen. All right, well, about 9 years ago, we had the end of the downtrend. We had 5 waves up after that, 1, 2, 3, 4, 5. And in 2015, we started with a correction with a strong fall up, and so started to make some kind of triangle with lower highs and higher lows. At this moment, that triangle, it looks to be an A, B, and we just made a C. It seems that C was very lengthy and complicated, which is typical and can happen most likely in a wave C. And this upside could be a wave D, followed by another move down to E, and the price could stay in a triangle like that for a while. I suspect that the triangle will stay active unless price breaks above this, below this support. And I think that otherwise we're looking at a wave D. So this looks more like a bouncing spot to me as it moves up. The breakout looks risky because it could easily be a wave D and then down for E. But if it makes an E, then that would be interesting if it moves up like that. It could also, of course, be, in theory, a bearish triangle with a down A and then an A, B, C, D, E, and then down like this, and then move up. I suspect that eventually it will move up because of the 5 waves up. So this looks like an A, and the down will be a B. But we don't know if wave B is finished. If we do get a lower low, wave B wasn't finished yet. So the triangle, I suspect that the triangle will take place. So I don't think the dollar yen will be that interesting to trade in general in the long term because of the triangle. And then it depends on the breakout direction of the triangle. I favor upside, but the triangle could break to the downside. If it does break to the downside, I think that the price will bounce at support fib. If we put a fib from here to here, like the 61.8 fib. Because ultimately, I do expect an upside and some dollar strength, A, B, C. So although I think that the euro and the euro dollar, pound dollar look bullish, I also think eventually the dollar yen will look bullish. But that might take a while. That might not be 2021. 2021 could be just a triangle year, I think, for the moment on dollar yen. All right, Bitcoin. Well, Bitcoin obviously made the pattern we suspected. After the 2017 Q4 run, we had a strong correction, ABC down, pop up, then a very strong retracement again, but a higher low. And around here, as price was bouncing at the 20-day, a uptrend seemed imminent, and it didn't seem like a triangle, but rather a wave 1-2, wave 1-2. And considering the momentum that we are having here, it is looking like some type of wave 3 is unfolding, and price moving up from as low as 3.5, just about 3,500, as even in this year, March 2020, as the COVID hit, Bitcoin dropping from a level of around 10,000 all the way to 3,500 during that March. And since March this year, in just 9 months, going from about 3.5 to 26,000, so about 8 times that value there. So 800% gain in such a short period of time. And yeah, price staying above the 20 MA was a very good indication of that already. At this point, I didn't know for sure because I thought it was maybe still some type of let's see, A, B, C, D, E. But as price then here did not move lower and here did not move lower, an uptrend seemed more likely. This is very strong momentum. And this is wave 3 at this moment. So keeping an eye on these monthly candles makes a lot of sense. As long as we see strong monthly candles, this is probably going to keep pushing higher, to be honest. I don't know where the next resistance is. Round levels, of course, we can put Fibonacci levels here, but I think round levels probably make the most sense. This could keep pushing up as long as we see strong price action. Eventually, of course, some type of corrections to take place, like we had here, the 21 EMA retesting as well. And I think eventually there will be some kind of bull flag or triangle pattern and a continuation of the uptrend. Considering the strength of momentum here, that does seem likely at this moment. I know that Bitcoin has, of course, strong ups and downs. We saw a price move up here from 800 all the way to almost 20,000 in 2017. But you can see that looking at those monthly candles gives a good clue, because here there was the end of the uptrend, or maybe even the weekly candles are better. Look, this weekly candle indicating the end. So as long as we don't have something that forceful, uptrend should continue. Even if we have a candle like that, the uptrend necessarily doesn't have to be over. We could see maybe a triangle pattern take place. If it is a wave 3, we should not see such a deep retracement anymore. And we could see just this shallow correction and then still a continuation higher. For the moment, I suspect that, but let's see. So for the moment, I'm suspecting bullish continuation of momentum. And if there is any correction, it should be shallow, I think, some triangle or bull flag and a continuation higher. Let's see. Other cryptos like Ethereum are following suit, but didn't break the high. I think they'll follow along Bitcoin, generally speaking, roughly speaking, not maybe exactly. When Bitcoin is moving up, the other cryptocurrencies might not move up immediately, but or it might actually not move up as Bitcoin moves up, but generally are following Bitcoin a little bit at least, not to the same degree, not at least Ethereum, but yeah, also moved up though a lot, $80 here and now almost at 750. So still plenty of upside, but definitely a lot less than the high here around 1400 back in 2018. So certainly not as much as Bitcoin, relatively speaking, but any flag, any triangle should see more upside as well, I think, with some of these stronger altcoins like Ethereum. I don't know about all the cryptocurrencies necessarily, but this one, pretty established uptrend, not as strong as Bitcoin relatively, but strong enough, I would say, for a pretty decent uptrend here. All right, silver to me looks very interesting in uptrend as well with the momentum we had in March as well with the COVID kicking in, hitting the rest of the world, making a low at $11, made a recent high at 29. I think that downtrend is finished and the correction is finished, and with this spike up, there's a fair chance in the next months, at least for sure, the first half of 2021, for price to eventually continue up to the minus 272 target in this uptrend. And looking bullish to me at this point. And I think if we get a break of this trend line, we might see this triangle push higher towards 27.50 and then $30, and then maybe even to $35, where's the minus 272 target. Gold, same thing, big bull run, generally speaking, end of 2019 started, second half of 2019, running into 2020 as well. 2020, January, we saw the low of 2020 in general was around 1450. The high almost at 2100. So certainly a nice bull run continuation. As suspected, we talked about this multiple places already in the last decade, that this looks like an ABC finish, uptrend, ABC towards 144 May, bounce, ABC, and suspected an upside either as a wave C or 3. Now, considering the strength of this upside, it's looking more like a 3. So this looks like a 1, ABC for 2, and a wave 3. Whether that wave 3 is finished, certainly not yet. We had fourth candle not breaking for a high, so certainly at least the first quarter of 2021, the uptrend is still very much in play. If it doesn't break for a new high in the first quarter of 2021, then we might see a bigger consolidation take place. What I would be looking for is what type of consolidation, a flag or triangle, more upside is likely. And a new high, one more high at least, if not maybe multiple higher highs, is certainly possible. Let's put a fib on this wave 1. See price hit the minus 200 target. This could go higher. The minus 261.8 target is at 2280, and maybe even 2,500, of course. Round levels certainly could be in play here. If for whatever reason price breaks through the 20 EMA zone, then I would be careful, of course. In that case, the uptrend might be over. But as long as price respects plus minus that 21 EMA zone, uptrend is in play right now, right here. And in the quarter 1, 2021, if we don't get a new high in 2021, a flag pattern might take place for the rest of 2021. And eventually, I would suspect an uptrend continuation to take place later in 2021 or even 2022. But the 20 EMA is key. All right. What else? Well, let's take a look at some of these stock indices as well, of course. Let's start with DAX. Again, a lot of volatility around the COVID situation here in February and March. Strong fall with all the stock indices, or most of the stock indices, at least the stock indices charts that I saw, had a fall in Feb and March, of course. But a quick recovery after that, much quicker than I suspected. I thought that the consolidation retracement would take longer, but it was really a V-value reversal, which the speed of the recovery did take me by surprise. That was really, really rapid and swift. And that looks like a wave 4 ABC will look like an upside for wave 5 at the moment. Price testing those all-time highs right now on the DAX. And looking bullish. Now, this is not really, I think, a great time to trade it to the upside right in front of resistance. But there were some good moments, after price completed the pullbacks and made some bounces at the 20 EMA zone, maybe in May, in June, October. Let's see if price, I think, keeping an eye on these monthly candles, who makes sense. Last month was a very bullish candle. I think that breaking this resistance zone is already actually taking place. Let's see how this monthly candle finishes. If it's bullish, the bullish close near the high. Otherwise, if yes, some retest of the support zone around 13,400, and then a continuation higher in 2021. Uptrend continuation does seem to have the best odds at this moment. Let's take a look at Dow Jones. Higher high established as well. Price is above the all-time high already there. Again, uptrend alignment, strong momentum. Now a little bit of a rising wedge pattern, but those rising wedge patterns can be tricky. Don't have to play out. Looks maybe even more like a channel. Obviously, at price that at that high, retracement would be good. Maybe back to the bottom of this channel, retest 29,700 or something like that. And if there's a bounce there, that might make more sense to look for some potential continuation of the uptrend at support. That would be the best, I think. So yeah, stock indices, very speedy recovery at all-time highs or about to break for all-time highs. Generally speaking, continuation seems likely for more upside in this environment, with interest rates going lower, with the vaccine, maybe stabilizing the COVID and therefore the economic situation in these stock indices in the US and in Europe at least. And therefore, another rally up wouldn't be, in my view, surprising at all. And I think that has the best odds. And looking for some retracements within this uptrend, in my view, has the makes most sense. Don't suspect any reversals to take place at this moment, at least. And I think uptrend continuations on play. I saw fundamental stats that show that typically, if there's in the US, politically speaking, this combination with two parties, the Democrats having the presidency and the Republicans having the Senate, that typically there is a very big gain in the stock market. So let's see if that particular pattern plays out again. But technically, from a price chart point of view, yeah, a lot of potential there, I think, for upside, to be honest, at this moment. Okay. So what else? Do you have anything you would like to look at? Maybe some of these crosses, Euro odd. Amazing upside, of course, during the COVID situation. Almost hit 2.00 from 1.6 zone. Spike to the upside and a big spike to the downside. Mountaintop reversal. And therefore, I think I'm more bullish on the Aussie dollar here at this moment, because I suspect that this will make a break to the minus 272 target. This basically, this ascending wedge pattern broke to the upside. Technically was an uptrend, but the rejection down indicates, I think, one more leg lower. In any case, with some kind of ABC pattern, we had a strong momentum followed by a flag. So I think the price will make a dip lower. And go back to support. We can put, and fibs, we can put a fib from here to here. Did not really stop at any of these fibs though. So yeah, I think that a leg lower is possible, and eventually, yeah, we'll have to see how this moves lower. Is this an ABC pattern down, or is this maybe even a stronger downtrend in play? I don't know. For the moment, an ABC is likely, and if it continues to fall, it's a 1, 2, 3. But there seems to be space for a fall down to 150. Strong support, of course, but I think price is about to break through that. Maybe we can take a look at the Euro Yen. And this looks like a triangle, A, B, C, D, E, or A, B, C, D, E, with lower lows and lower highs. Now, considering the euro strength that I expect, and the yen, dollar yen, kind of going sideways for the moment, I think the upside has an edge. So I do think that it's more likely that this is an A, B, C, D, E finished. And let's see if price breaks above these long-term moving averages. If it does, that will be the third break. And I think in that case, we should see a rally up on the euro yen to let's see, to at least a 78.6 fever, I would say, for the moment, maybe the 88 and the head and shoulders level here. There seems to be more upside on the euro yen, in my view. Pound yen. Pound yen, let's see. For people who are joining now, we started the webinar a little bit earlier than planned, so you can always re-watch the recording, by the way, as soon as it's finished, okay? You can see the first part that you missed. Pound yen, yeah, not as bullish, obviously, as the euro yen, but I think if the pound dollar also makes that potential rally, as I suspect, that we should see another, if price is able to break above the 20 finally, after years and years staying below it here since 2016, with the higher low, I think there is a chance that this might break above the 20 finally for a move up towards those long-term moving averages. So that seems also quite likely. Let's take a look at dollar Swissy. Swiss franc seems to be strengthening, and considering the euro dollar uptrend that I'm suspecting, this could fall a little bit more. Difficult to say how far, but if we put a fib from here to here for the moment, 85 seems to be a reasonable target at this point, which is also the previous support zone, 83.50, which of course there could be another bounce at that support area. For the moment, downtrend, and suspect that it could fall, but not, be careful. This might not fall that much before there might be a bounce. Not because of dollar strength, maybe, but because of Swiss weakness. Let's take a look at some other pairs like the Australian dollar, USD, and this is looking bullish as well, even more than the euro dollar and pound dollar, with the euro odd falling potentially to the downside. That's not surprising. And it looks like the swing to the downside has been completed, as we suspected that this was a wave 4, and that indeed happening. Bear flag pattern after a strong move lower, break of the bear flag pattern, and if wave 5 follow through, and we should see a rally here, followed by a correction and a rally. So a little bit of continuation, followed by an ABC pattern, maybe into the head and shoulders level here, and then a bounce, same like the euro dollar pound dollar, looking quite likely for the Australian versus the US dollar. My view on the New Zealand USD, same thing really, but even more bullish maybe relatively compared to the Australian dollar. So let's take a look at New Zealand if that's true. And New Zealand, of course, in a range. And not sure if that's true looking at the double bottom, plus the fact that, this could break to the upside too. Let's see. I don't know. It could stay in the range as well, for that matter. It's about halfway, but considering the bounce here, I think it could weaken a little bit, find a higher low though, and make a rally into that top of the range for the moment. All right. I think that's more or less what I wanted to share, at least at this moment. Do you have any questions? So, of course, this is my view at the moment. Obviously, 2021 is a long year. It's 12 months, and things can change, of course. After first quarter or after half a year, obviously, new information is available, etc. But otherwise, I think that that wraps it up. Once again, we got a special sponsorship here going on from these providers here. Check out providers, sponsorships, and there's a whole list of them here that you can choose from. But there's a special offer from Unfex. Check out if your country, if your country of residence qualifies. UK is okay, by the way, is qualifies for that, and all kind of bonuses with each of these offers. All right, special sponsorships. So that's available for you. Otherwise, if you're interested in some material for myself. Check out SWOT, of course, simple wave analysis and trading. A lot of educational value, a lot of strategies, indicators, ebook, massive course with 70 videos, 22 plus hours, a lot of value there. Indicators, strategies, almost ebook of 600 pages. So a lot of things to learn. We also have automated trading systems, of course, as well, and different type of trading, not only forex and CFDs, but options and spreads as well. So hope to see you as one of our members in something here in 2021. Wish you all great days in the rest of this 2020. Happy New Year, healthy 2021, and of course also great trading. Cheers. Bye-bye.